I'm Matt Bishar with NAREITWeek.com. I'm here at the Waldorf Astoria Hotel in New York City for REITWeek 2016, NAREIT's Investor Forum. Joining me for this CEO Spotlight is Kevin Grant, President and CEO of CYS Investments. Kevin, thanks so much for joining us.
Yeah, I'm happy to be here. Thanks for having me.
So I think it makes sense. Let's start with the basics. What is a mortgage REIT and how is it different from what investors expect with an equity REIT?
Well, we own mortgages. In our case, we own mortgage securities, and we happen to own government-guaranteed mortgage securities. So in the capital stack of real estate, we're actually the top of the stack. We don't own the underlying equity. We actually own the mortgages. And typically we use a little bit more leverage on our balance sheets than a property REIT might. But property REITs do use leverage. So that's really the key difference.
Obviously, one of the major issues for all companies, but mortgage REITs as well, is interest rates and a lot of discussion about where they're going. What do you think will happen with the rates, and what sort of impact does that have on a company like CYS?
Well, I actually founded this company with the strategy in mind of the environment in which we're operating. And my view has been that with the demographic changes in the country, the technological changes, technology replacing labor and so forth, and the regulatory headwinds, that we would be in a very low growth, although steady growth, and low inflation environment for a long time. And this creates a low and stable environment for interest rates, and this is what's playing out. And we're actually a beneficiary of this because we borrow a lot of money and our cost of borrowing is very low.
And can you elaborate on, when you had that vision, what steps you've taken to position the company, and how can you plan ahead while also being nimble for any unexpected changes?
Well, the key for us is liquidity, and by liquidity I mean cash on the balance sheet and government bonds that are not pledged as any collateral anywhere. And we run our liquidity at well over $1 billion on a continuous basis. So we actually hope for volatility because we would love to be able to put that $1 billion to work.
And lastly, what do you think is the most common misperception that investors have about mortgage REITs, CYS, companies like yours?
Well, the funny thing is, a mortgage REIT, our assets are marked to market every day. They trade every day, and our book value is an accurate depiction of how we might actually sell the company on any given day. Whereas a property REIT and other kinds of REITs, they're not marked to market every day. Now, buildings, they change value every single day, but a property REIT or a property company in general does not mark those assets to market every day. So people have to look at our book value and the volatility of our book value and really compare it to what? To compare it to something that's not marked to market every day is really not an accurate comparison. So when you see our book value move up and down, really the way you should look at it is if our book value is moving down in a given quarter, that's an opportunity for us to buy more of those assets at a cheaper price.
Kevin, thank you so much for joining us.
Thanks for having me.
For more from REITweek 2016, be sure to visit REIT.com.